Winston Churchill famously once said, "Never let a good crisis go to waste." With that said, guys, for today's video, we're going to be taking a look at the current crisis that's surrounding the UK company known as Boohoo and how this might be an incredible opportunity for investors like you and myself. What's going on, guys? My name's Emmanuel and welcome to my channel. And let's just jump straight into this, guys. Boohoo, ticker symbol BOO.L, experienced a huge sell-off from Monday to Wednesday's live trading sessions. It dropped well over 40% in just 3 days, bringing it close to its pandemic lows of just £1.95p a share. So for this video, guys, I want us to take a deeper look as to why Boohoo had this massive sell-off over the last 3 days, whether the reasons for this sell-off will affect Boohoo in the short or long term. I also want us to take a look at the current road to recovery and also look at their financial status. And by the end of this video, guys, we'll have all the facts needed to decide whether Boohoo is still a stock worth buying, and if so, at what levels. Don't forget to smash the like button as always, guys, as it helps with the YouTube algorithm. And if you're new here, I want to say welcome, and I hope you gain a ton of value from today's content. And if you do, don't forget to hit the subscribe button, as it'll be really cool having you on board. And with all that said, guys, let's just jump straight into today's analysis.
Alright guys, so before we jump into the reason why Boohoo experienced a massive sell-off over the last 3 days, I always like to do a company profile so we can look at the fundamentals of the company before we decide to make an investing decision. Okay, so the company we're looking at today is Boohoo. And what's their story? So they're a popular online e-commerce fashion giant retailer that are based in Manchester, UK. And they've also expanded their operations into Europe, US, and internationally. So in terms of the fashion world, they are global, okay guys? So they specialize in designing, sourcing, marketing, and selling of clothes, shoes, accessories, and beauty products. And their target audience is between the age of 16 to 40-year-olds. So you're looking at your millennials to your late stage baby boomers, all right? So their USP is fast fashion. And if you're not familiar with the term fast fashion, it means it's inexpensive clothing that's produced rapidly, usually within a week to 2 week span. And it's in response to the latest trends on social media. So for example, if you have a influencer who's posted a picture of themselves in a particular clothing item, Boohoo and its competition generally take that picture and try to replicate that particular fashion style and have it on their websites within a week to 2 weeks of the influencer's post. What are the interesting fundamentals surrounding Boohoo? So the BBC actually published an article this year stating that in the UK, we buy more clothes per person than any other country in Europe. That is crazy. And I believe this trend will accelerate with the growth of e-commerce online shopping, okay? So there's a huge market there, guys. And I think this growth reflects on Boohoo's year-on-year revenue and earnings growth, okay? So let's take a look at their revenue and earnings at the moment. All right, guys, so we are on seekingalpha.com and take a look at Boohoo's revenue growth since 2016. And this is beautiful to see. As an investor, you want to make sure that their revenue is continuing to grow year on year, and also look at the expected growth for 2021 and also 2022. So there's no slowing down with Boohoo's growth in their revenue. As you can see here, guys, their revenue growth year on year is sitting at 44%, which is massive. Look at that earnings per share as well, guys, which is EPS. That's also been growing at 44% year on year. So in terms of the company's growth, there is no doubt in Boohoo's revenue and earnings growth. Now, how does Boohoo generate their revenue? Okay, so they generate their revenue from sales through their popular subsidiary brands. So you've got the likes of Boohoo, you've got Boohoo Man, you've got Pretty Little Thing, Coast, Nasty Girl, and Karen Millen, all right? So Boohoo's main competitors are In The Style. And funny enough, In The Style are actually based in Salford, which is around the Manchester area as well. You also have the likes of Misguided and also Fashion Nova. These three are their main competitors within the fast fashion industry. Now, what is causing the massive sell-off for Boohoo? Okay, so I think it's a combination of three factors. All right, So the first factor is this: they've been accused of modern day slavery, right? Paying their workers in Leicester £3.50, which is way below the minimum wage of £8.72 for adults over the age of 25. Okay, now, so when I was researching, I was asking myself, like, who would accept this kind of wage? Okay, and we'll get into that later. But as of right now, they're being accused of paying their workers in Leicester £3.50 an hour. Okay. Alright guys, so I'm going to take you to that article now. So as you can see from this headline on Metro, guys, it says Boohoo accused of slavery as Leicester factory workers are paid £3.50 an hour. Now that's madness. Alright guys, so the second factor that I believe contributed to this massive sell-off was the UK also imposed a 2-week lockdown in the city of Leicester. And Boohoo have again been accused of forcing their workers to go to work in the factories during the lockdown, okay, which obviously means they're breaking the lockdown regulations by the government, and they're also putting their workers at risk of contracting the dangerous and deadly Rona, all right? And the third factor, guys, you've got huge brands like Next, Zalando, and ASOS are now boycotting Boohoo brands, okay? So if when investors see that you've got big names like Next, ASOS are all saying they're going to boycott Boohoo, of course, investors get scared and they start selling off their shares, all right? So let's take a look at the impact on their share price. So I'm going to take you to TradingView for this, guys. All right, guys, so we're now on Boohoo, guys, and take a look at March, okay? So when the pandemic hit and all the lockdowns were enforced, you can see Boohoo had a massive sell-off to all the way to £1.53 a share, all right? But as things started to get better, they started to rise again, and they actually broke past their pre-pandemic highs and went even higher back in May. And then the news broke, guys, on the 6th of July. And as you can see from the Friday's trading all the way down to Wednesday's lows, it dropped a total of 49% over the course of 3 days as a response to the news and the growing public concern. Alright guys, so you now might be asking yourself, like, why is this an opportunity? This is horrendous. You know, what are Boohoo doing? Here's what I've discovered, guys. Boohoo are being branded as the bad guys, and I think it's pretty much just to sell headlines, okay? Because obviously they're world renowned, they're global, they're everywhere. Everyone knows what Boohoo is. And I think they've labeled them as the bad guys. So it turns out it's actually their suppliers in Leicester that are called Pfizer Fashion, who supply Boohoo, that are responsible for paying their workers below the minimum wage. And that's according to the Daily Mail, okay? So you've got Boohoo taking all the headlines, but it actually transpires that it's not Boohoo that's paying below minimum wage, it's Pfizer Fashion. And I'm going to take you to that article now. So as you can see here, guys, they're pretty much running a sweatshop in this factory. And again, I've mentioned it here, it's Pfizer Fashion based in Leicester. So it's this company, which is also a Boohoo supplier, that are paying all these workers £3.50 to create fast fashion clothing items. So guys, I think as the revelation starts to come out as to who is actually responsible, I think this might actually start to win investors back, and they might start to realize that, you know what, the problem's not with Boohoo, the problem is with this company called Pfizer Fashion. And I think investors will start flooding back, okay? So I think the second reason why I think this is an opportunity is I also think it's a reputation play. You know, the boycotts from Next are attempting to portray a good moral image. And we saw something similar literally just a couple of weeks ago with Facebook when you saw all of those boycotts. But the fact is, guys, they will eventually return because their revenues pretty much depend on it. So I can guarantee you the likes of Next, the likes of ASOS boycotting, it's only a temporary thing. And also, guys, Boohoo have also announced that they will be starting an independent review of their Leicester supply chain for poor working conditions as a response to the growing concerns, okay? I think this sell-off is an incredible opportunity to invest in a company that has solid financials and solid long-term growth prospects, okay? So let's take a look at their financials right now. Okay, guys, so I've already showed you their income statement and their revenue growth. Now I want to take a look at their balance sheet, okay? So this will give me an indication of their long-term sustainability as a business, all right, guys? So taking a look at their total current assets, the total current assets is sitting at £382 million, and their total liabilities is sitting at £217 million. So they have a lot more current assets than they do current liabilities. Now, From my last video, I got a lot of people messaging me that they're new, they don't understand what the term current assets means or what current liabilities means. And all it means, guys, is the current assets. If Boohoo had to sell all of their current assets within the next 12 months, it would equate to the value of £382 million. And the reason why this is important is because if Boohoo run into serious problems, they've got enough in their total current asset value to cover their total current liabilities, okay, which sits at 217 million. So the total current liabilities are their financial obligations that they need to fulfill within the next 12 months. So these are their loans, their interest payments that they have to fulfill to their creditors within the next 12 months. So if you have a company that can't fulfill their financial obligations within the next 12 months, that's a massive, massive red flag for me. All right, guys. So I hope that makes sense. And looking at the stockholder equity, guys, you can see it's been growing year on year. And the stockholder equity pretty much means that their assets are growing much faster than their liabilities. And taking a look at their total cash position, guys, they have £245 million in cash, and their total debt is only 20 million. So these guys have more than enough cash to fulfill their long-term debt. They pretty much have no debt, guys. And as I showed you, their current assets versus their current liabilities, that means they have a current ratio of 1.76. And also, guys, looking at their free cash flow position, they've got positive free cash position, and it's also been growing year on year, which is also another positive for Boohoo. All right, guys, and taking a look at the insider transactions, as you can see here, they've all been buying up shares. So these are key figures within the company, and they've all been buying up shares. And these guys bought 35 million shares in Boohoo, which is crazy. All right, so insider transactions pretty much is an indicator that the directors, the CEOs, the managers feel like this company is undervalued and there's a lot more growth potential for the company. I like to look at insider activities just to give me some reassurance that I'm also making the right decision. Because if the insiders are selling and I'm buying, I'm thinking to myself, yo, what's going on? Then maybe they're thinking that this stock is overvalued, and it's a bit of a red flag for me. All right, guys, so lastly, their operating margin is sitting at 7.36%. With a profit margin of 5.16%. So the operating margin pretty much means for every £100 that the company makes, it keeps £7.36p as earnings. Okay, so that's quite typical when you look at other competitions as well and their operating margins. Operating margins typically range between 5 to 10% for online fashion retailers, guys. So that wraps up my analysis.
Guys, the fact is, Boohoo is one of the fastest and largest online fashion retailers, and I think this may deter some people from shopping at Boohoo, but not everyone. But I think in the grand scheme of things, especially as the news starts to blow over, Boohoo will continue to grow. The growth of online shopping continues to surge. My average position in Boohoo sits at around £2.70 a share, and if it does go lower, I will add to my position at about £2.50 a share, and if it does drop even lower, I will add again at £2 a share. Again, just keeping an eye on the fundamentals and the news. But these are just my thoughts and my analysis, guys. As always, make sure you do your own due diligence and your own analysis before you decide to invest in any stock. One Up on Wall Street by Peter Lynch is my investing Bible, alongside The Intelligent Investor by Benjamin Graham. Incredible book, guys, and the links to both of these books are in the description below. Make sure you grab yourself a copy. And if you do want to start investing, guys, I would highly recommend my broker, Trading 212. Click the link in the description below, and Trading 212 will give you a free share, and it will also give me a free share. With all that said, guys, don't forget to smash the like button once again, hit the subscribe button and the notification bell if you definitely want to see more content from myself. Thank you for watching, guys, and I will catch you in the next one. Peace.